Hi, good evening, ladies and gentlemen. Welcome back to our Rakuten Insight with NagaWarrants webinar tonight. Today, the team we have is the ladies team. Let's welcome my partner Chayu and Megan from NagaWarrants. Hi. Good
Hello,
evening. Hello,
evening.
hello. All right, so today they are the main speaker. I'm just the MC, okay? So today's agenda is simple as usual. I will share about the market overview and Chai will be sharing on the theme of the day, which is earnings review, good, bad, or so-so. We don't know, so stay tuned for her sharing. And Megan on Naga Warrants, and we will wrap up the session with a Q&A. So let's start with the market overview. So Hang Seng Index ended lower last week with 1.32% close negative. So because because the investors turned cautious, so the drop came after the US court put Trump's tariff back in place, which raised worries about trade tensions returning. So at the same time, markets are waiting for the China Factory Activity Report, which is the PMI report, which is expected to show signs of weakness. So even with the dip last week, the HSI still went up 5.3% for the whole month of May. So this is thanks to the support, thanks to the strong interest in the new IPO support. So over 150 companies are lining up to list in Hong Kong market. So with many aiming to raise more than 1 billion Hong Kong dollar. So this shows a sign that the investor appetite is picking up again. So for Wall Street, it ended the week on a strong note. So supported by the mix of trade relief, solid earnings, and positive economic signals. So market initially rallied after the U.S. trade costs struck down President Trump broad tariff, so which lifted the investor confidence. Although there's a temporary stay was later issued by an appeals court, the investors seem less reactive to the back and forth, helping markets to remain steady. So adding to the bullish momentum, Nvidia's strong earnings driven by the growth in the AI-related demand boosted the confidence in the tech sector. And meanwhile, better than expected inflation and consumer sentiment data reinforced the optimism that the US economy remains on a stable ground. So looking back to domestic, KLCI dropped 1.76% last week. So this decline was mainly driven by the continued foreign outflows. As you can see from the screen, the table shows 1 billion outflow last week for foreign fund. So particularly from the large cap stocks in the banking and plantation sectors. So investors were also worried the restatement of the US tariff, so which ignite the global trade tensions concern and triggered profit takings across the emerging markets. So we can see the local insti and retail has finally come back to net inflow, supporting the market, maybe some bargain hunting. So next slide, we talk about the technical view. Actually, there's nothing much for KLCI as the market is quite bearish right now. So we can see the index has break below the 1,500 level today during the trading hours. But good news is it closed above the key support level at 1,500. So the next immediate support if it breaks below the 1,500 is 1,490. So the KLCI closed lower today in tandem with the selling pressure on emerging markets in the region. So key regional indices closed mixed due to the uncertainties in Trump's tariff war, which took cautious trading. So market sentiment remains muted on the domestic front as investors take a wait and see approach in response to the continued foreign selling and rising global trade uncertainties involving the US. So the benchmark index is currently near its psychological 1,500 support level. Despite this obstacle, we see this an opportunity to pick up blue chips at lower level given their strong fundamentals, cheap valuations, and attractive dividend yields. So as such, we anticipate this KLCI to trend within 1,490 to 1,520 range today, this week. So next slide, we can see a small recap on the stock picks last week. So last week I've shared about the HSI, and these are the stock picks. We have this Anta, Meituan, Sino Biopharma. So we see a favorable increase for these three stocks looking at the T+3 closing with 3% upside for Anta, 3% for Meituan, 5.5% for Sino Biopharma, which means HSI is still in a positive momentum. So that's the overview of the market performance last week and the stock picks recap. Before I pass the time to Chai, let me slot in a quick promotional call up. So Rakuten Trade made investing more affordable. You can now trade Bursa, Hong Kong, and US stock from as low as 1 ringgit and enjoy a flat fee of 2 ringgit and 88 cents for trades up to 9,999.99. So for the US stocks, we have slashed the minimum brokerage to just 88 cents. Previously is $1.88. So lower fees means more return. So if you haven't activated your account or made your first trade, now is a great time to start. If you are interested to open an account with Rakuten, just click the link sent in the chat box later to register an account and start trading in lowest brokerage rate in Malaysia. So, all right, that's all from me now. I'll pass the floor to Chai.
Okay. Good evening, everyone. Thank you, Crystal, for the quick market update. And hi, Pak Ling. Okay, our main focus for tonight is the corporate earnings review. Before I point out the stock picks, let's have a look at the year-to-date sector performance. Okay. All right. Okay. Looking at the sector-wise, we can see in the chart, obviously, out of 13 sectors, only one sector, which is REIT, recorded a 1% growth, which we can deem it as flat during the last 5 months. And others are all posted negative performance, with healthcare and tech recorded the most losses at negative 24%. Okay, next we're looking at the sector performance for May. Good news is all sectors recover gradually, with construction led the gains, followed by energy, property, and REIT. With the construction companies posted decent first quarter result, we can see that the index has performed quite well in May with a 6% growth. Okay, and the others is energy, property, and REIT. Next slide, we take a clearer look on the sector. The first one is construction. Construction is the only outperformer among the 5, as the 3 big players have steady pipeline and order book. Both IJM and Sunway Construction reported stronger than expected results, and the key deviations was due to better than expected construction segment for IJM and accelerated recognition of the data center projects for Suncon. And Suncon has surprised the market by winning a few data center construction jobs from K2, which valued at 260 million ringgit, and the US-based tech company 1.15 billion ringgit. Okay, and lastly we have the Gamuda, and we will talk on Gamuda later on. Next, we have financial service, which is market perform. The first quarter net profit growth moderately, supported by subdued total income growth, and the operating expenses rose 3% year-on-year, while provisions declined as the recoveries offset higher forward-looking provisions. The loan growth at moderate level, while the net interest margins show mixed trends with some contraction and slight expansions year-on-year. Next, we have the telco. Telco earnings were within expectations, a bit at the lower end of expectations due to higher costs and flattish revenue. The higher cost was observed due to 5G traffic. Despite that, the sector still served as a good defensive option, attributing to its inelastic domestic demand, under-owned positions, among the investor and decent dividend yield of 4 to 5%. Next, we have tech sectors. Tech sector's earnings broadly disappointed due to sluggish and demand and the trade war uncertainties. Some companies did perform relatively better, attributing to suspected front-loading, cost cut, and the U.S. reshoring opportunities. Lastly, plantation also within expectations with strong first quarter result underpinned by its higher palm product prices and lower fertilizer costs. And their downstream earnings declined year-on-year in first quarter 2025 due to the weak selling prices and demand. So overall, we deem the current quarterly results as so-so. No major downgrades is good news in view of the ongoing trade tensions turmoil. Okay, next we have our stock picks for tonight. We have 5 in total. We have CIMB, Gamuda, Sunread, Rakuten, and Kenanga. Let me break down one by one. Firstly, we have CIMB. Within expectations, their first quarter result net profit rose 2% year-on-year to 1.97 billion ringgit, and the NII, net interest income, grew slightly, supported by 2% loan growth. And quarter-on-quarter, their net profit rose 10% on better trading and fee income. So CIMB remains attractive due to its over 6% dividend yield and their green financing leadership and stable return on equity. Okay, Gamuda, below expectations. Their earnings affected by the weakening margins for FY25, but is expected to rebound by FY26. Their solid prospect underpinned by a strong 37 billion ringgit order book, and recently Gamuda has acquired a 336 acres of leasehold land near their Gamuda Cove for 249 million ringgit. This land, adjacent to the existing township, will support a new mixed development with a GDV of 2.2 billion ringgit over 11 years. The land will enhance Gamuda Cove's overall connectivity, complementing existing and their future commercial offerings. Okay, next we have Sunread. Their first quarter net profit increased 20% year-on-year within expectation, driven by their newly acquired retail assets and stronger performance from Sunway Pyramid and Sunway Carnival. The 136 Malls net property income yield has risen to around 9% after their tenant mix improvement, and we also see Sunway Pyramid's new Oasis wing now draw 40% higher footfalls. Okay, next on we have Celcom DG. Celcom DG's first quarter results were within expectations with 27% decline year-on-year, and don't get surprised on it as the previous year's earning was lifted by the one-off tax provisions reversal. So, and the postpaid momentum continued in first quarter with solid quarter-on-quarter net increase of 46K. Looking ahead, merger synergies between Celcom and DG are expected to drive 700 to 800 million ringgit annual cost savings by steady state in 2027. Lastly, we have Kenanga. Their first quarter net profit up 11% year-on-year, driven by the strong commercial segment growth that led by data center. Okay, now technical wise. Okay. First one, CIMB. CIMB is hovering between 6.85 to 6.98 after the rally from its previous dip, and we believe a decisive move above the 6.98 may be a trend reversal. Hence, potential entry was identified at 6.85 to 6.98 range with exit range at 6.8 to 6.69. Okay, next, Gamuda. The stock is moving sideways within the range of 4.52 to 4.74. And with the stock continues to trend above all the EMAs, coupled with the 20-day EMAs still pointing upward, we believe Gamuda's uptrend remain intact in short to mid-term, supported by its fundamentals, and the key support level is stand at 4.45. We only see correction move it if it's break below this threshold. Okay, next we have Sunware REIT. Sunware REIT remain its uptrend after its rebound from the falling wedge pattern in early April. And we also issue a technical view on 11 April. The stock is now trending at 2 ringgit and 5 cents, which saw a 10% increase from our last technical call. So Sunrate near-term outlook remain positive, with the 20-day EMA remaining above the 50-day, and we believe the uptrend may continue in the near term to test the resistance at 2 ringgit and 8 cents, followed by 2.11, while key support is stand at 1 ringgit and 98, followed by 1 ringgit and 94. Next, we have a telco stock, Celcom DG. We also have has issued a technical view at end of April, and the stock has surged about 9% to its year-to-date high, and now at healthy correction phase to almost its support level. If it breaks below the 3.67 support level, it may be a further corrections in the near term. Okay, last but not least, Kenanga. Kenanga is experienced pullback after the rally. We view this as healthy corrections to sustain the ongoing uptrend, while the key support is identified at 13.86. We only see further correction if it breaks below that threshold. And if the stock rebounded from both support level, we might see trend reversal to test its resistance at 14.22, followed by 14.5, supported by its strong fundamentals. Okay, that's all for my part, and I hope you guys found this insightful, and I will pass the floor to Megan on NagaWarrants. Megan.
Hello. Thank you, Chayu. Hi, everybody. And disclaimer, this session, can you see my slides? Oh, nice. Perfect. Disclaimer, this session is purely for educational purposes and does not constitute any buy or sell recommendations. And hi, I'm Megan, part of the award-winning warrants team, NagaWarrants by Kenanga. I'm licensed under Security Commissions Malaysia for Modules 6 and 7, which authorize me to deal in securities and provide regulated investment advice. And we are proud to be number one structured warrants issuer in Malaysia, holding 52 market share in 2024. Our success is backed by products that meet local and international standards, and we will be constantly recognized with multiple prestigious awards, which includes Prusa Excellence Awards, Golden Banking and Finance, SRP, and Finance Asia in 2025. Beyond products, we are also passionate about education. Award-winning educational videos on YouTube, empowering traders across Malaysia to trade smarter. And during Chayu's session, she shared stock picks based on FATA, fundamental and technical analysis, giving you the insights on what to buy and when to buy. And guess what? For NagaWarrants, structured warrants on this stock, future structured warrants on these stocks, there's CAMB C1Z, Gamuda C3D, CDB C59, Kenanga C3A. And these 4 warrants will be featured in our buy bid promo tomorrow. You can check it out on our NagaWarrants Telegram. And if you're new and wondering where can you get all these matrices, just head over to www.nagawarrants.com/naga-matrix. It's written below. And every Monday, our Kenanga research team shares fresh trading ideas. For this week, we have Hang Seng Index Futures, Great Tech, and ROIPG. And for last week, we have P Metal, Press Metal. We also post weekly recap updates to track its performance, as you can see on your right. And you want to get all this information instantly? Go to your Telegram app now, search NagaWarrants and click join. And today's topic, I'll be showing you a powerful tool for trading warrants, the Naga Matrix. For those who don't know, the team will actually send the link in the chat box and you can click it here in the chat box. And the important key to take note on Naga Matrix is the traffic light. At the top of the matrix, we have enhanced our Naga Matrix last year, so you can instantly get an overview of your selected warrants. And from your left, we have the underlying bid price, underlying ask price, warrants bid price, and warrants ask price. For green, we have over here example is Xiaomi C36. The warrants bid and ask spread is tight. Whereas for orange and red, we have Tencent C33 and BYD C32. The issuer is not keen to sell this warrant. Therefore, they increase the warrant's ask price while maintain the fair bid price. This means that you can always sell back to the issuer at a fair bid price. And for updates, our daily update on Telegram, we have NagaWarrants. And if any inquiries, you can just ping us NagaWarrants issuer. And for YouTube, as I mentioned just now, we have a series of award-winning educational videos at Kenanga channel. And for upcoming webinars, mark your dates. We have this Kenanga Solar Sector Outlook by the Kenanga Research on 19 June. You can check out on Telegram for more updates. And that's all from me. Pass back to you, Crystal.
Hi, I'm back again. Thanks, Megan. I hope you all get some insights from Megan and Chayu just now. So, yep, let's welcome back Chayu, and now it's time for Q&A. So if you have any question, feel free to type in the chat box. We will answer accordingly.
Yeah. Okay, I saw impressions from YouTube. Your technical views on UUE and RAM, so please. Okay, let me share my screen. Share. UUE, yeah. We have issue and technical view on UUE today. So, okay. Okay, UUE is consolidating within this rectangular pattern since their corrections after the strong rally in mid-May. And we observe that UUE might is poised to break above this rectangular pattern and to trend higher to retest its resistance at 73 cents, supported by the healthy EMA. So we might give some time for UUE to confirm their trend reversal above this rectangular pattern. So if it can break above this 73 cents, the next resistance will be at 77 cents. Their support is at 68 cents, followed by 65 cents. Okay, so next, Rensu. Okay. Looking at the long term, Ramsor is experiencing a long-term uptrend since January last year. And we can see it continue to trend higher to test this crucial resistance at 0.875 after this U-shaped recovery pattern. It break above this U-shaped neckline from the U-shaped recovery pattern. So it continue to trend higher and reach its crucial resistance at here, 0.875, and then experience some healthy pullback, short-term corrections to form a support at 0.775. So we will see this 0.775 support as a crucial level. If it managed to hold above this level in near to midterm, their further correction will not happen yet. And currently, they are hovering between 0.85 to 0.905. So with the technical setup still remain healthy, but I think it needs some fresh catalyst or some announcement to boost the stock to trend higher to test the resistance at 93 cents. Okay. Stop sharing.
Okay, I saw another question from William Yip on EMPLA and Public Bank. So let me share my screen. Okay, let me see on EMPLA. Okay, EMPLA is experiencing a kind of 1 month downtrend since last year. So we might see it. So currently we might see a small rebound here starting April. Looking in the near term, we might see a rebound, but the rebound is not confirmed yet, as this is just a small rebound. If it breaks above this resistance at 56 cents, we might see a further confirmed rebound, as there is a bullish crossover here. We can see here during early May. So we can see there is a few green candlestick closing consequently. So currently we might see a short-term pullback. So if it can hold strongly at 50 cents, we might see a further upside. If it breaks above the immediate resistance at 56, we might see a confirmed trend reversal for EMPLA. Okay, and the other one is Public Bank. Okay, we can see Public Bank is actually trending sideways between 4 ringgit and 28 and 4 ringgit and 63. But today it has touched its key support at 4 ringgit and 28. If it breaks below, we might see a short-term downtrend. And if it holds above this level, we might see it will continue to trend within this small consolidation phase between 4 ringgit and 44. If it breaks above this immediate resistance at 4 ringgit and 44, we might see a further upside here between 4 ringgit and 44 to 4 ringgit and 63. So midterm wise, it's actually trending sideways. All right, that's for Public Bank. I think I'll take one more from TC Spritzer. Okay, let me show my screen. Spritzer. Okay, we have a drop today. I think it's because we are nearing the dividend X date. So we can see Spritzer actually is a quite strong in fundamental. The stock has been trending upward since a few years back. The fundamental is strong for Spritzer, and we can see in the near term, it has surged from 1 ringgit and 43 to 1 ringgit and 60, and now we see a pullback. It is actually quite, we consider it as a healthy pullback, so there's no worry for Spritzer as fundamental back. So we can see if Spritzer can hold above this 1 ringgit and 57, then we might see potential rebound here. If it breaks below, we might see it will still trending between a consolidation phase between 1 ringgit and 43 to 1 ringgit and 72. All right. right now it's just a healthy pullback from its rally. Okay.
Yeah, and just a little update on their recent results. Spritzer reported a decent set of first quarter results as well. Their net earnings rose by 26.7% year on year to 19.7 million ringgit because of the stronger volume growth and enhancement in the EBIT margins. So it's a fundamental stocks.
Yeah.
For BJ Heng, yes, we used to have structural warrants for Kenanga. We used to have structural warrants on KLCI. Unfortunately, now we don't have. But if you are keen to trade in KLCI, just feel free to ping us and let us know.
Okay, so another question is from Kenny Chen. Yu Li. Okay. Share screen. This stock a bit dangerous because it always have this strong long black candle after a small gain within the months. So currently this stock is at on its downtrend, so we don't see any trend reversal in at this point, and it might be continued its correction phase in the near term. And their technical setup also not that healthy, so you may stay cautious. Okay.
Is there any more question? As it is 8:32 now.
This is syndicate counter. Okay. Thank you from BJ Hang. Yeah. Thank you too. Thank you for your support. Yeah, single handle control stock. Probably. Yeah.
Yep. And thanks, Youngjae, for the comment. I think we have come to our end. So let's wrap this up. Thank you everyone for joining us tonight. Glad to see you all here and for an active response and participation. And thank you, Charlie and Megan, for the sharing tonight. Hope you guys learned something from Charlie and Megan tonight. And yeah, that's all. Good night and bye bye, everyone. Have a good evening.
Yeah. Thank you and good night, everyone.
Bye,
Bye,
everybody. Good
guys.
night.
See you guys next week. Bye.